It's 9:27 a.m. in Tokyo. The London session is coming to an end. And for traders around the world, that means one thing: time to start watching the US Open like a hawk. Well, not if you have a trading bot doing the watching for you. Welcome to Trade Tech Thursdays in your YouTube channel Stock Trader School, from rookie to rainmaker. Today, we are answering the ultimate question: what can trading bots really do? This is called rule-based trading, and it's one of the easiest ways to understand how bots work. A common use case is to pair a bot with a day job. Let's say you work 9 to 5, and there's a great trading opportunity in the forex market during that time. Building a new strategy can take hours or even days, but with a bot, you can test thousands of different setups in mere seconds. After all, a bot doesn't know it's a Fed day, but you do. These are known as artificial intelligence or AI bots, and they use machine learning to improve their performance over time. For example, you could train a model to recognize faces by showing it pictures of people with their names written underneath. Once the model is trained, you can use it to recognize faces in new pictures. If you don't already have a winning strategy, a trading bot won't save you. Number 1. Use them wisely, and you'll be rewarded with increased efficiency and profitability. Use them unwisely, and you'll be left holding the bag. So before you invest time and money into a trading bot, ask yourself, am I ready? In fact, it could make things worse. Just ask any quant fund that's been struggling lately. Number 2. You're disciplined enough to follow your rules. If you find yourself deviating from your rules on a regular basis, a bot probably isn't right for you. The whole point of a bot is to remove emotion from the equation and stick to a predefined set of rules. Number 3. You understand the risks involved. Trading bots can be risky if they're not used properly. Make sure you understand the potential downsides before you get started. Number 4. You're willing to experiment. Don't expect to get rich quick with a trading bot. It takes time and experimentation to find a profitable strategy. And number 5. You have some technical knowledge. You don't need to be a coding expert, but it helps to have some technical knowledge. Most trading bots can be customized with simple code snippets, and understanding the basics will allow you to get the most out of your bot. Unsupervised learning involves training a model on unlabeled data and allowing it to find patterns on its own. For example, you could train a model to group customers based on their purchasing behavior and then use it to predict which customers are most likely to buy a new product. And reinforcement learning involves training a model to make decisions in an environment where it receives feedback in the form of rewards or penalties. For example, you could train a model to play chess by rewarding it when it wins a game and penalizing it when it loses. Here's a quick overview of the main types. This means that they're not feasible for most retail traders, but for those who have the resources, they can be extremely effective. In fact, there are certain situations where bots actually make things worse. This is especially true during times of high volatility when the markets move outside of normal ranges. Bots tend to stick to predefined rules and won't be able to adapt to changing conditions. For example, let us say you have a bot set up to buy the dip every time the market experiences a 5% drop. During normal times, this strategy might work great, but during a flash crash, it could be disastrous. Similarly, bots may struggle with gray area setups where human intuition is required. For example, if you're trading equities and the price suddenly starts moving sideways after a strong uptrend, a bot may not know what to do next. In this case, a human trader might choose to take profits and wait for a new buying opportunity, but a bot would simply follow its rules and continue buying even though the price isn't moving in the desired direction. This allows you to fine-tune your rules and truly understand the dynamics of each strategy. Plus, you won't have to worry about hindsight bias because the bot will handle all the data collection and analysis for you. With a trading bot, you can take advantage of these opportunities even when you're busy working. Or maybe you prefer to trade cryptocurrencies but find that the market moves too fast for you to keep up with manually. In this case, a bot can help you track prices and execute trades at lightning speed. The key is to focus on bots that fit seamlessly into your existing workflow. Here's a quick breakdown of the process. First, you define the problem. Most active traders rely on multiple strategies to maximize their edge. Sometimes momentum trading works best. Other times you need a more directional bias. With the right bot, you can easily switch between strategies and take advantage of whatever the market offers. Not only will this help you diversify your trading, but it can also help you avoid overtrading any one particular strategy. Next, you write a set of rules to solve it. Then you test the rules and adjust them as needed. Finally, you automate the rules with code. Of course, there's much more that goes into creating a profitable trading bot, but this gives you a taste of how easy it is to do. If so, we have some good news for you. The EMAs are set to 50 and to 100 periods respectively. Whenever the price crosses the 200 EMA from below, we would like to receive an alert. To set this up, just drag and drop the watch block onto the 200 EMA, then connect it to the send push notification block. Once this rule is set, you should receive a notification on your phone whenever the price crosses the 200 EMA, and there you have it. It took less than a minute to build a fully automated trading bot right inside your web browser. You don't have to be a coding genius. In fact, you can build simple bots without writing a single line of code. That's because most trading bots are built with pre-made blocks that connect like puzzle pieces. For example, you can use conditionals like if this happens, do that. This could be as simple as if the candle closes above the 200 EMA, then send me a notification. And here's how that might work in practice. We'll look at how bots are programmed, when they excel, and where they still need a skilled pilot. So let's get started. Have you ever wanted to make a trading bot? Maybe you've considered building a custom algorithm or programming your own strategy from scratch. So we're looking at the 5-minute time frame for Apple stock. Another great use case is pairing a bot with other strategies. And finally, perhaps the greatest benefit of using bots is the ability to backtest quickly. There's no denying that trading bots are extremely useful, but it's important to remember that they're only as good as the trader using them. So which bots are the smartest? Ironically, they're often the ones that mimic the human brain. Supervised learning involves training a model on a labeled dataset and then testing it on new data. The downside is that AI bots require a lot of data and processing power to function properly. In summary, trading bots can be a valuable addition to any trader's toolkit, but they're not a magic bullet. That's it for today's episode. We hope you enjoyed learning about what trading bots really are and how they can help you take your trading to the next level. Remember, tools are only as powerful as the trader using them. Code smart, test well, and I'll see you next Thursday with more tech-driven trading insight.